there's a point where currency weakness becomes too much. So, when you look at Japanese importers, when the yen's above 120, dollar yen's above 120, it suddenly becomes a little bit trickier for them as well. So I think, the BOJ for the last year or so has certainly been factoring that in. They haven't been as aggressively chasing currency weakness as they were, a couple of years ago. I think the other thing that's worth saying is that when the BOJ started its big easing cycle, was dollar yen was at 80, and the currency was pretty overvalued. When you get to 120, suddenly the yen's quite undervalued. It becomes very hard to keep driving that currency weakness.
So let me just say, so Abe is denied in Parliament that this is about the refinancing of the huge 240% debt to GDP that Japan has got, replacing 1 to 2 handle debt with 0 handle debt, basically. He's denied that, and it's not about the currency anymore. So do we take them at their word? This is about reflation? Because where are the signs that any of these policies are working?
Well, I think the weaker yen did help to a degree. I mean, inflation got into positive territory. So, that's a start for Japan, actually having positive inflation rather than deflation. All these policies, I think, it is unconventional. We don't know exactly how they will work, if they will work. So clearly, the fact that we've had 20 years of relatively stagnant growth and no inflation in Japan means we have to keep going down that route.
Karen, I know you're desperate to come in, but Dominic, you've just said, this is, what is it, unconventional policy. None of us are quite sure how this is going to work. None of us are quite sure how this is going to work, but we're spending trillions of euros, of yen, or we were spending trillions of dollars doing this experiment. None of us are sure how this is going to work. Shouldn't we all be absolutely terrified when people like you, eminent economists, speak like that?
No, I don't think so. I think, the future is always uncertain.
This is an experiment, and so we've basically just thrown the textbook out. 200, 300, 400 years of orthodox monetary policy. We've thrown it out the window, and we've got an experiment, and what we're doing, we don't know how it's going to work, so we're going to chuck more and more money at it. I'm terrified.
Well, I'm worried about you, Steve. If you're terrified, I'm perfectly happy. I think that we're in a world where unconventional policies are required because we've had an unconventional sort of recovery, really. And in many ways, people talk about negative interest rates, for example, being unconventional. But in reality, is there anything different from cutting by 50 basis points from 50 to 0 than there is from 0 to minus 50? I mean, we talk about it from a currency perspective, and we don't think that's the case.
There's a huge difference because depositors can't get paid minus 0.5 really, because the banks have to take that on the chin as well. The banks see, which are supposedly, and still the transmission mechanism, they're getting destroyed by these negative interest rates in many ways, shape or form, from traditional models of making money as well. So we're taking out one industry and we're not giving people income, and we've got an ageing population. So I would suggest there is a big difference from going from ZERP to NERP.
Well, I think, if you look at what's actually happened in the last few weeks, last few months, as we've gone to NERP, as people like to describe it, we haven't seen this big catastrophic leap that people's mentalities have changed and everyone's rushing to get cash and hold gold. I mean, at the margin, some of these things are happening, yes, and there are going to be consequences to a degree, but equally, you need to stimulate demand in some way. You need to stimulate growth. And I think if you look at what policymakers have done in the last few years, they have helped to at least support growth to some degree. And, I think in the time we are now, I think some of these signs are coming through that growth is recovering in places like the US.